All right. Just give me a few moments, just setting up here.
Mic off. Mic on.
All right, all right. How is everybody doing? Welcome back. Let's go over everything. All right, we'll start with the equal weighted S&P 500. And I'll say it again. This is what I think the market should really look like. Maybe a little bit lower, of course, but um, yeah. So it broke out. It's testing the previous high, and it is. Let me just put that there. All right, testing the previous high, finding some resistance, potential area reversal. We've said this a million times, and I'll move it out a little bit more. Okay, so this morning to subscribers, I said don't be too bullish. If you're going to short, short, and take profits quickly, and we're going to see this here shortly. Why? Here is the dividend S&P. All right, I think this is more indicative of what the market should look like. I would have been perfectly fine if this is the way the market's behaved, because it reflects everything, right? A little bit of hopium, crack pipe, a little bit of oh, let's buy the dip sentiment, right? Oh, things are gonna go back to normal, okay? Um, Increased deficits, right? And put it all together, okay, this is more understandable the way the chart looks. The way that the Nasdaq has behaved, and the S&P and small caps to a certain extent, not acceptable in my book. Uh, Interesting. We come back to this 25 level on the VIX and we bounce again. Okay, so now this is an expansion of the flag, is what we would call it, or of the wedge, whatever. It's a structure above a structure again because whatever it's doing, it's correcting through time. All right, and if we were to get a push through here, and we don't have a hook for this last portion, so this is not really a valid um, line, okay? Because you can only count a 1 and a 2, right? There's no 3, so it's not necessarily a valid, but it does help to illustrate why I'm saying this is still a structure above a structure correcting through time. That if this were to hold, come back a little bit, and then push higher, I think that would be a more substantial breakout. All right. Taking a look at the S&P 500, it's the cleanest chart out of them all. This was uh, the chart. I left the chart, I think, last couple days ago, looking like this, right? That it was going to do something like this, right? And that's exactly what happened, right? Don't short, don't short, don't try to get the shorts. This morning, when we saw this structure here, okay, this is um, uh, a chart setup that looked to me that it had a down move and then one more up. That this would end up being fuckery. So I said, if you're gonna short, short, but take profits quickly, and I still mean that. Now, what's the point? What am I looking for? What's this all about? I am looking for the M pattern. I've been talking about this fucking M pattern since March. And before that, the Eiffel Tower. And to a certain extent, it was an Eiffel Tower. You just have to take it off of log. You gotta kind of zoom it out, right? And you can see it very clearly because somebody's sitting here trying to bust balls. Don't bust my balls, right? Where it goes straight up and then goes straight down. This is an Eiffel Tower, all right? I don't know, 35% drop out of 100, right? You're always 100% from zero. You get a 35% drop to sign an Eiffel Tower. Fuck's wrong with you, bro? Some people, man. Anyway, so now we are looking for an M pattern. And the M pattern, you can kind of see the makings of an M pattern here, right? That we're either going to reverse at the top, just above the top, or just prior to the top. Just prior to the top is typically the preferred way of topping patterns. All right. I still think we have a little bit more to go. Um, and maybe I should take this stuff off. It's okay. I'll leave it for now. But last week, all week, we were talking about the inverse head and shoulders, inverse head and shoulders. And we wanted to see a nice, clean, thrusty move to the upside. That's exactly what we got. All right. Now we have this high base consolidation breaking down a little bit. I think it's going to end up something like this. Okay. And then you're going to get one more up, possibly test the previous high. And then we're going to look for the downside. All right. Just take this stuff out. We'll leave it to the way it was for now. All right, Nasdaq, head and shoulders, another one. They're all over the place. And today, for me, I think this was the most telling, right? That we did get this. When I put out the post this morning, we were somewhere up here, if I'm not mistaken. And then this was going to complete. Here's the head and shoulders. There's the neckline. Here's the break. Okay, take your profits. Look for this to bounce. Look for that to bounce. Now, imagine that it doesn't. Imagine that today and tomorrow the market does this. This, it looks funky. Okay. Why am I saying that? Because the market has to be ready to go down. It doesn't. Markets don't go up like this, do this, come like this, go like this. That's not the way markets work. Okay. That's important to remember. So imagine a move like that. It doesn't look right. It's funky, man. So look for one more up. See how it starts to perform. If this does happen to be the right portion of the M, and we get sufficient amount of a hook, and it ends up looking like that, okay, well, that's fine, because then anything, let's say it does something like this, anything in this area would end up being a short on a structure like that. All right, that would be a chart pattern that is ready to go down. Going straight down from here is, I mean, anything can happen. Come on, fuck. And look at the past, 6 months, but it's not a chart that looks like it's ready to go as of now. Small caps. This looks a lot more like it's ready to go down. um, for a number of reasons. One, it didn't have the thrust as of yet to go all the way to the top. Okay, uh, and that is a subtle, small, telling sign that there's weakness. Okay, yes, it did break the previous high, but it didn't quite get there yet. So if it starts to roll over, okay, there's a higher degree of confidence that this structure may break. Second, the obvious, okay, flag. You can even see the little baby head and shoulders in there, right? Okay, little baby head and shoulders. We'll chalk that off. Forget about it. Let's just uh, focus on the flag here. All right. It's not technically correct, but it's good enough for government work. Okay. It's not a leading market for me to worry about technicalities on that. All right, the market leaders, incredibly bullish. They created this little bull flag and failed. Okay. Um, does that mean that's it? It's over? Game over? No. Okay. It can still come down and like this, and then one more up and then down. Okay. We're not out of the woods. Don't get bearish. Um, Transportation, they've been having a very difficult time up against this resistance area. They're climbing the wall of worry. There we go. Okay, previous highs, grinding up there, getting tighter. Okay, getting tighter up there. All right, it's still within the bear flag. This would be again a chart that would be ready to go down. All right, let's skip that. Let's go to the Nasdaq. Okay. Did we talk about this? Yeah. So just real quick while we're sitting here, going into the 3 o'clock hour, let's do a 1 minute analysis. The lowest point is here. You gotta, when even I've been doing this for years and I still get a little confused. You want to start from the lowest point from this move. Okay, that's where your count starts. So for now, if you were learning how to chart properly with validity, this would be the 1, this would be the 2. Okay, so we're looking for one more up. We don't know how extended this is going to be to define a structure. And let's say it goes up to this point, okay, and it looks like that. Well, and it hooks over. You got to have the hook. Got to have the hook. If you don't have the hook and price keeps going higher, what are you going to do? You're going to keep going, okay, now it's like this. 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 You see what I'm saying? It doesn't work. You got to have the hook. All right. Oops. All right. So let's say it looks like that. Okay. And it hooks over, and price is going back and forth in here. Once it breaks, you can go back short. It's simple, right? Um, it's a nice little risk reward area, right? You understand what the structure. Yeah, but it's a 1 minute. No, forget about the 1 minute. Don't worry about the 1 minute. Worry about the time that you're analyzing. All right. It has nothing to do. It can be a 5. I'll put it in a 5 minute. Right? We're talking about short trades here. We're not talking about medium or long-term trades. Okay. You can take that to the short side. We're still analyzing the same time frame, right? So please, por favor, min fadlik. All right. So for now, we're expecting another wave up. Transportations, NDX, Russell, we talked about World Stock Market Index, and this one is lightly traded, so we have to zoom out. Okay, testing the previous high. Of course, you're going to get some kind of a pullback. That's okay. Airlines coming back into structure. Okay, they tried to push out incredibly bullish and couldn't manage to do it. I wonder why. So, little expansion of the flag. And again, we are looking for the next move down in airlines. Okay. When would I be bullish in the airlines as an index? If you were to cross this. All right. Now this is very choppy. This is very choppy. This is unbelievably choppy. But within this wedgy looking pattern, right, price does form structures. And the way that we would look at this, it's a 1, a 2. This whole thing is a 2. Okay, you can see it's a 1, it's going to go 2, 3, and then boom, down. Okay, it will continue from, this is our compass here. This is telling you which way it will resolve ultimately. That's the compass. Right? Doesn't have to do it. Nothing is 100%. So, yeah, but if it's not 100%, why are you doing it? Because it works most of the time, 60, 70% of the time. Okay, and it's very hard to explain to somebody that this is a 60-40 or a 70-30 because they become fifters. I call them fifters. They come in, oh, I think it's going to happen this, and it's based on some cute story, and it's going to happen. Yeah, well, your guess is as good as mine. Yeah, but you don't understand. Yeah, you have a 50-50 chance of being right, but you can't do that repetitively. And that's the difference, right? You got to have repetitiveness and you got to have an edge. And that's the point of bare knuckle charting. Finding the good risk reward. I don't care about your story. Don't tell me about your story. It's garbage. You can't repeat that story. And charting you can. All right. Sorry. Going into my little rants. Hilton, Diana Shipping, Avis, Delta. This is a little index that that I created. And, you know, again, looks very nice in terms of its usefulness because what it's telling you is that it was going up very nicely. Everything was fine. 1, 2, 3 up, right? Comes down, pops up, has difficulty getting back into structure here. Okay, and this looks like a market that can come down and test one more time. All right. If it does go down again, and I want to pause here for a minute, I'm going to go into my little rant again. When we started back in March, the lockdown, it only lasted a couple of weeks, honest, and it wasn't a proper lockdown. It was a bullshit lockdown. Lockdown is when only one person is allowed to leave the house, and they can only go to pharmacy and supermarket unless they have to go to the hospital. They have to get government approval. There's got to be police, and in some cases they have the National Guard, whatever. Okay, that's a proper lockdown. We didn't have one here in the United States. Opens up in stages based on the data. That didn't happen in the U.S. So when people keep saying, well, there's a lockdown, no, there isn't. There wasn't, and there's not going to be one under Trump. Okay? And did we shut down portions of the economy? Yes, we did. But that's not a lockdown. That's not the definition matters. The fact that you shut down restaurants and bars and movie theater, that's not a lockdown. That's a bullshit lockdown. So again, it's very difficult for people to understand this. Okay, so we went through that phase, the make pretend lockdown. It was the shock. Oh, COVID is real. Then we went into the hopium stage, right? It's hope. The vaccine is coming. It's going to go away with the warm weather. Whatever the fuck it's called. Right? So we went through that phase. Vaccine, stimulus, vaccine stimulus, vaccine stimulus. Day after day, market goes up. Market is a forward-looking indicator. I told you by the dip, blah, blah, blah. So I went through that phase. Now we're getting into the fatigue, confusion, what the fuck is going on phase. This is serious. They're not saying it, but people are feeling it. I was downtown Philadelphia today, and our restaurant, one of our restaurants, that has closed down because there's no business. There's nobody in the city. Um, After 47 years, it was the last 24-hour diner in all of Philadelphia. It shut down. And I walked around. I haven't been down in the city for a while. And I walked around and all the other stores were closed as well. Uh, Delis, barbershops, you name it. All closed. It looked like a ghost town. One of the biggest cities in the United States looked like a ghost town. I don't know. So now we are in this stage of confusion. The wave is coming back up again. We don't know how high it's going to go. Um, People are uh, trying to figure out what the truth is now for real. Before it was just politics. Well, it's just one case in the United States, man. It's fine. We shut down China. Yeah, we shut down air travel. Yeah, 43 borders were closed prior to the United States shutting down. Don't and on top of that, anybody can come in the United States, like I did back on March 16th. Not a single question was asked of me. No thermal scanners of my temperature. Everything was fucking like, yeah, welcome to America.